On this video, I'm going to explain gaps within specific stocks, okay? Within the NASDAQ specifically. So, as we dive in, as you saw in the previous video that I posted, there was an explanation on when the market closes and when it opens, that the indices is still able to be traded after hours. So price has to come back to its original closing point when the market opens up again. All right, and this is proven time and again. Every time that it doesn't come back, expect that to be a future target. Okay, so right now on the NASDAQ, we have a target of right here, 14,596 approximately, and price today closed at 14,225, which means that we have about 373 points for the indices to climb, for it to close that gap from its previous imbalance right there. Following this imbalance that we have a total of 842 points for it to climb overall to close both of those. Okay, now let me show you how the stocks look like in comparison. So we're just going to scroll down a couple of them. Let's take Apple, for example. Okay, so Apple, what we see here, there are no gaps to close. There's a very small one, but this is insignificant by comparison to a lot of others, right? What a gap is, as you see, it's from wick to wick, and if there's no space in between that there's any other candles at play, that is a gap that needs to be filled, okay? So this is a very small one from Apple, nothing too spectacular. Holy notifications. All right. Amazon, no gaps to fill. AMD, no gaps to fill, except for a little one up there, but again, that's insignificant. What do we want to take a look at? Let's go Disney. All right, so here what we see is there's a small gap to fill right there. Otherwise, there's really not a whole lot going on, but this is at least a target for from a high that it wants to return to. Okay, Meta, so Facebook, that's a big ass gap. Pardon the language, but just to use that as an example, this is where price needs to return in order to be able to close it. Even if it's just going to be a spike for one day, like a wick taking out that entire space, it still needs to happen, right? There's only one other, and that, as you can see, like every gap that was formed in the past from this stock, and it goes for every stock, right? I'll just give you an example, okay? Look at how the market opened. Okay, I'm just going to draw the box from here. Okay, so when did that close? Right there. Right? Here's another imbalance that was forming. Right? Look at all this. So from close to open, when did that finally end up closing? Right there. You know, here's another imbalance, or a gap, so I should say. That's where it closed. Right? Every single time a gap is formed, it needs to close. It's not going to happen right away, but it does need to happen. Okay? Another example right here in the past. Right? Didn't quite hit the mark, but overall, that is considered a closing of that gap. Right? We had a big, wide space from there. That's where it ended up. And then we moved on. And we went a little bit lower. Okay? So what you're going to see is when it went from its original high, like its highest point, and to where we're at now, there's going to be several gaps for the stocks to fill on their train upwards. Okay, so now what we see on Meta, right, this gap wasn't filled. Right here, right, we see that was only taken about halfway, right, and as we can also tell, it spiked up and came close to it, right, but it didn't quite close it entirely. It just went up to about like a 60% on that gap. But what we had is a double top right here before we had a big drop. So that would also be a very strong indicator that this stock wants to move down regardless of earnings. Sure enough, earnings didn't really give it any assistance, right? I mean, it dropped hard because it failed to meet quotas. So that's Meta in a nutshell, right? We have all of this to fill, which is approximately $70, I want to say. 60, 69 and change. Right, that's how much we want to, that's how big of the gap that there currently is to fill, and this is where we're at right now. Our lowest point was at 190, we closed off today at 208, right, so we're slowly getting up there. I don't think it's going to happen anytime soon, but at least we know that this needs to close in order for the stock to actually balance itself out. Okay? Goldman Sachs, same idea. Big gap right here that needs to fill. As you can see, this gap that occurred was filled, right? All of that. Price was hit all the spots that were missing, and then it continued on its way down, right? So if we bring Fibonacci into the equation, we go from the highest point to the lowest point, and what we can see is that sweet, sweet retracement in the golden zone, right? Hence my golden lines right there. Between the 50% and the 618, that's when a lot of the moves happen on specific stocks. So sure enough, came right back to that zone and dropped hard again. However, even though it dropped, it did not beat its previous low, which was right here. Right? As you can see, the wicks came close, but it didn't actually beat that previous low. So what this tells me is that this stock is on the way up. And sure enough, we formed a gap right here. And that gap needs to be filled, which will happen in the upcoming days, right? Because we're not that far off. This one, however, that might take a little while to get to. Home Depot, gap to fill right here. And another one, right? We're almost at that first gap, actually. We had a nice climb over the last couple of days. Honeywell, not a huge gap overall. I mean, it's about $20 off its opening right there. But as you can see, that is quite the gap to fill up as well. We're going from $207 and then we dropped to $200 and it never came back into that area. So that's what we need to fill before we continue upwards or downwards. So this is a target area. All right. Let's see. American company. Nothing really to fill. Everything's been taken care of. As you can see, there was one there and it got taken out. There was one here, got taken out. There was one here, got taken out. Right? That's all done. Microsoft, no gaps unless we go higher. Right? But even then, they're extremely small. So I wouldn't use these ones as projections. Netflix, huge gap to fill. Huge. All right? That is one of the reasons why I predicted going at least to the 507. Remember, this stock was at almost $700. For it to drop down to 350, that's 50% from a multi-billion-dollar company. To say that they're they've lost their streaming power and no one's really watching Netflix anymore. I mean, you say that, but they've beat their estimated revenue and they beat their estimated earnings. So what you've been told is not entirely accurate. So Nike, right? Similar story, gap to fill. PayPal, gap to fill. Tesla's looking pretty good. There is no gap to fill, right? Even when we go all the way up here, this has been pretty close, making a double top and going lower. So Tesla is kind of on its own. It's going to be a little bit volatile, so it's up to you. It is going up regardless. It's just, the sweet buying spot would have been just around $700. As you've seen, it climbed to $881 at today's close within a week, right? So that would have been a very nice buy. That went up over 20%. Visa, there was a gap to close, and that's where it was filled. Right? As you can see, there was two gaps, actually, both in almost the exact same spot, but it has been filled and it's all done. All right. Walgreens, only a small little guy right there. Walmart, any gaps to fill? Nope, they're all taken care of. Don't mind my retracement. I don't need that anymore. All of them are filled. As you can see, this one has been snagged. If we go back any further, this gap right here was snagged here. Right, so it's all been picked up, and that's what I'm trying to get at, right? Like they will all be closed. Roblox, let's see how Roblox is. Big ass gap to fill. Pardon my language again, right? I understand that it was due to earnings, but that is an extremely strong move just based on earnings of one day, where it dropped over 30%, right? As far as market structure is concerned, $13 just from close to, for the almost $16 from close to open, right? But as you can see, every previous gap that it had was filled, right? If we're saying that's a large gap, oh no. Well, look at this one. Earnings dropped how do we have a gap going upwards? Right? We gapped $17.50 approximately from the earning report here. But you know, it got snagged. Like I said, every gap needs to be filled. And there's your fill. That's when it was taken out and it went lower. So as this happens and it has a bullish run, expect that price to always return. And if it's bearish, same sort of idea. If it forms a gap on the way down, it will be filled one way or another. All right. And then, you know, SPX I just did up for the sake of a little bit of practice. You know, we've retraced our 2018 levels finally here. As you can see, this gap that happened due to news of Russia invading Ukraine, and that's exactly why every single stock that day kind of tanked hard, but recovered pretty much by the end of the day or the day after, right? So it's almost like we can erase that day from existence because it proved of no significance other than getting stocks at a discounted rate that day. All right, so that's my little lesson on gaps. I hope that it's been helpful. Like the video and subscribe to the channel if you can. That will greatly help me. And any requests you have in the future, don't hesitate to send me a message or comment in the channel below. Thank you very much. See you soon.